Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look at the Aussie versus US dollar from a technical perspective, so let's get started. I'm looking at the hourly chart, and what we saw in trading yesterday was quite a volatile ride that sort of ended near unchanged levels. The initial Asian session saw ups and down price action, but that down price action came in and found support buyers against its 100-day moving average and a 100-hour moving average. The 100-day moving average is a step line. This smooth blue line is a 100-hour moving average. You can see how the price low in the Asian session yesterday came down, tested that dual technical moving average level, and moved back to the upside. And that move to the upside then broke above the 200-day moving average. That's the green line right here. And then the 200-bar moving average on the 4-hour chart. Things were looking pretty good going into the European session, but we started to rotate to the downside, and that rotation to the downside continued as U.S. data, like initial jobless claims, showed a strong labor market and maybe some Fed speak that puts off the idea of a Fed cut anytime soon, helped to push the yields a little bit higher, at least in the short end, and also the dollar a little bit to the upside as well. The Aussie versus U.S. dollar went to the downside. But as we can see at the lows for the day, the price did get below that rising 100-hour moving average and also the 100-day moving average. But the break below the 100-day moving average was brief and quick, and we started to rotate back to the upside, closing a little bit higher than the close price from yesterday. But it was a ride. It was a ride up and down in trading here today. So what's ahead for this pair as we head into the new trading day? Well, looking at the technicals that we've been looking at here, the next target to get above, if the buyers are to take more control, is a 200-day moving average that comes in at 0.65609. And we're going to continue to look at the 200-bar moving average on the 4-hour chart as a level that we need to get to and through to increase the bullish bias. Near that 200-bar moving average is also the 50% retracement level. That is of, I'm going to have to go to the 4-hour chart to show you where that comes from. If you go to the 4-hour chart and take a look at the low that we had in October to the high price that we saw in the month of December, the 50% midpoint comes in at the 0.6569 level. And as you can see in trading this week, the price had moved above it earlier this week on Tuesday and then a little bit on Wednesday. And yesterday we got further above that level, above the 200-bar moving average, but could not sustain that momentum. So getting above both the 200-bar moving average on the 4-hour chart, 50% retracement, 200-day moving average. Those are all levels that need to be broken in order to increase the bullish bias for this pair. Absent that, we're still in this neutral area between resistance up here near the 200-bar moving averages and support down here near the 100-bar moving average, including the 100-day moving average, and below that the 100-bar moving average on the 4-hour chart as well. So I can't help but be more neutral because, but with maybe a little bit of a bullish bias because we're above the 100-day moving average. But there's work to do in this currency pair to prove that the buyers really mean business and can take this pair more to the upside. So there you have it, a technical look at the Aussie versus US dollar. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.